Hello. Got a little bit of a small crowd
Hello,
here today.
hello.
How
There
are
we go.
you? Oh,
Oh, there's Scott.
cool.
Morning.
How's
Morning.
it going? How you doing? How's your back?
It's healing away, just like it's supposed to, a little slow, but this is the second operation on it
Oh,
in the
wow.
last couple of years. So
Backs are
hopefully,
backs are
huh?
tricky.
Yeah, and I had a cancer on it on my vertebrae on two of them, and they ate it away, and then they put a plate in it, and the screws came out of
Oh
the
gosh.
vertebrae they attached the plate to.
Oh wow.
And of course, it took them a while to figure it out. I'm going through the VA system and I love it to death, but they're just slower than molasses sometimes, figuring things out. Everything is to take a pill and come back and see me in 6 months, and we'll see
Oh
if that
wow.
did anything. And it's the same with just about every aspect of their system that they have to go through. But they finally figured it out, and yeah, you got two screws coming out now, 3 years later. And so here
Where
we
they
are
just come
now.
loose?
Pardon?
Where they come loose?
Yeah, they wallowed themselves back out of the bones because they're all getting brittle and
Oh.
all around it.
I think it's because Scott goes to dance night every Friday at the Elks Club. He
Exactly.
rattles those out, him and his wife dancing.
The secret's out now. Don't tell nobody.
That's hilarious.
Are you getting a little warm down there in Oklahoma?
It is. It's getting up into the 90s, which seems like the low, 100s now, and
Ugh.
sweltering humidity. And, it's kind of, in my younger days, I didn't mind it at all, but in these days, I mind it a lot. I'm grateful
I
for
hear you.
grateful for air conditioner.
Yeah,
Yeah.
I hear you.
My my brother-in-law, they live in New Orleans during the school year, and then Scott, Louisiana, which is near Lafayette, Louisiana, in the summer. And they found out they had, I guess they call them dry termites in his house, in their house in New Orleans. So they're treating that. So they go back to the house in Scott for the summer, and the AC's out.
Oh, wow.
And I guess, from what I understand, it's hard to, everybody's AC is out basically.
Wow.
And so now, and if you've ever been to Louisiana in June,
Yeah.
humidity's brutal, and it just gets even worse as the month goes on. So hopefully they got it fixed. But I was like, you're really cooked if you got two houses under fire, no place to go really.
Exactly.
Uh,
Wow.
yeah,
Terrible.
yeah, it happens, I guess.
Yep, that's
So
what I was telling.
Everybody's got their woes.
What's that?
Everybody's got their woes.
Yeah,
yeah,
it's kind of weird out here because it's summer. I run in and out of the office out in the farm and back, and I take sometimes 3 showers a day just because depending on what I'm doing, and it just sucks,
yeah.
'cause
Well, the thing is, have you ever lived in Florida,
I
Mark?
walk out of the barn, I'm sweating to death. I have to come back in, and do things like this, and I'm like, oh man,
I I just quit showering.
oh no, that's why you don't have any friends.
Yeah, that's why everything's Zoom for me.
Yep.
Hello, everybody. I'm just going to say hello once. I'm Shirley Weaver in the Houston area. I'm brand new and I'm just interested in listening.
All
Hi,
right.
Shirley.
God bless
Well,
you guys. I'm putting it on mute.
All
Okay.
right. Thank you for joining us.
I used to live down in the Houston area in Tomball. So you've got the heat and humidity down there too.
Yes, we do.
Yeah. Okay, well, we'll get going here. Hi, Paul. How's it going?
It was a good week. Can't
Good for
complain
you.
about this week. We can't complain.
You were
Apple-
a lot more aggressive than me. I tend to on these weeks with no market conditions such as these reports to kind of to hang low. But if you were in the right stocks, which I think you were watching the Discord, you can do pretty well. I was looking at the markets and it's just really strange because, you know, about 60% of the S&P's total return for the year has been driven by really 5 companies. And those are the heaviest weightings in the index, which is NVIDIA, Microsoft, Meta, Apple, Amazon. And you look at the 10 largest stocks in the S&P, and their weighting is they're almost 35% at the end of May. And that's the highest ever weight for 10 stocks, for in that index history. So if you're in those, or anything around in the NVIDIA world, you can do pretty well. Others can get, the breadth of the market is not, it's not like 70% of the stocks are going up every day. It's more like, 30 to 40% of might be going up, and the others are not doing so well. So I know you do some trading. I know you picked up a lot, I think, this week. And tell me if I'm wrong, some of your longer term investments.
Yeah, I've gotten more bullish since NVIDIA did its announcements. And every time a company like Broadcom or Adobe, they're just like a commercial for NVIDIA. So
Yeah,
all these big mega techs are just saying we use NVIDIA chips, and that's just more NVIDIA sales. And even on we had maybe, did we have any bad days? I think it might have been one bad day, but NVIDIA was up every day. And if you look at the weekly, and I've been trying to focus more on the weekly now, because the weekly, you could see the stock starts petering out, So weekly's picking up traction with NVIDIA. And then I've always knew that that cycle is going to come along. It was just a matter of time before they're going to announce something with AI. And I thought it was monstrous that they're, embedding their operating system with ChatGPT. I know Elon wasn't big on that, but
yeah, I thought
that's huge.
that was pretty interesting when he got involved in that whole deal.
Yeah, and there's a reason he's getting angry. I think he's getting angry because that's money right there that he wants to be a part of. So that's the commercialize. It's not the business or the industry. It's the people are using this type of AI, not the service industries or other industries. So I think that he's a little pissed that he's not part of that.
He should be pretty happy though, because the shareholders gave him his raise though, right? His bonus.
Yeah,
And
holy cow.
Well,
Can you imagine sitting down with your CPA? Oh, I got a $56 billion payday. How do
I
you
got
think
a
I should
tax
deal with
tax
this?
issue to talk to you
Oh.
about.
Elon, did you bring your big checkbook?
yeah, that was an easy trade, right? You could have bet for Tesla. I mean, everyone who is with Tesla wants Elon. There's a handful that don't want Elon. So I don't visualize there being a Tesla without Elon. So there's
Yeah.
I said I missed that trade. I should have bought right when they were gonna right before they were gonna vote, because Elon's gonna win. That's gonna be an easy win, I think. In my opinion, it was an easy win.
It's interesting. I was looking at 2 companies over the last couple of days, and Tesla is one of them. It's come down. I'm looking at the weekly, like you're looking at things, and it looks like it's just going sideways, and now it's making a move higher. And then I was also looking at AEHR. They've been in, I think, 11 weeks, basically sideways movement. And this week, if they were to break over, I think it's the 20-week moving average. That could be, I mean, they're both sort of married together in a sense.
Yeah.
That could be a move higher as well, up into the $20 range on AEHR. But
it could be, but it's riskier. Why would you go to a riskier play? There's other less riskier plays out there.
Because you base jump off 34-story buildings, and that's the kind of mentality
that's what we do here.
Hey, Paul, his last name is Grinkmeyer. Come on, say no more. What is that whole thing? Apple tree fall not too far.
Yeah, right. Yeah.
So, well, we'll get the charts. We're gonna get to some charts and do a lot more charting today. I just want to go over a few things this week, which was of interest. And again, I think I'm like a broken record. I am so tired of worrying and having everyone talk about this interest rates and when are they going to cut rates. We've been doing it now for 14 months at least, and The Fed comes out and tells us one thing and the market doesn't believe it. And we've been doing that nonstop. And I'm wondering, you know, if the market is and the economy is so good, why would we even need to do an interest rate cut? Because if we're doing so well and the market's well, you know, record highs, why would we even care about that? I mean, we're back to basically the normal for the last 100 years on interest rates from the Fed. And so again, when you look at it, I don't know why they're wishing for it so much, because even a quarter point isn't going to do much, and it takes, you know, 12 months to get through a system. And so, and historically, we've talked about this too. We've looked at the charts. When the Fed starts cutting rates, that usually puts us into recession. We have an inverted yield curve right now, and we'll just see what happens. So, you know, I would be wishing myself that they don't cut rates and things just go on forever like it is right now. But that's not what the media wants at this point. And, you know, I was looking at the Federal Reserve statement, and I always go look at it, and they said recent indicators suggest that economic activity has continued to expand at a solid pace. Job gains have remained strong, and the employment rate has remained low. Although I was watching the Fed, you know, Powell's deal, and he kind of made a, you know, a little smirk about, you know, the jobs report, and, you know, well, you know, it's a little wonky a little bit, but that was interesting. Inflation has eased over the past year, but remains elevated. Okay, so inflation has not come down. It's just not going up as fast as it once was. Okay, so they always make it sound like inflation is going down, but it's not going down. That's disinflation. When you start having negative readings, then it is going down. But when you're still positive, that's just deflation. Okay, it's not going up as fast as it was the month before. They don't really explain that very well. So again, he says inflation has eased over the past year, but it remains elevated. That's what he means. In recent months, there have been modest further progress, toward committee's 2% inflation objective, which I don't believe they're ever going to get to. And I'll show you why. And I'll show you also why inflation is not at 3 point whatever percent they say it is. So he went on. And so when you look at the summary of their economic projections, they expect a single 25 basis rate cut this year, fewer than the 2 rate cuts that are currently priced in. Remember, we started this year 6 months ago. What were they thinking? 6 rate cuts? Okay.
Yeah.
Now we're down 5, then we're 4. Now we're down to 1, and they still don't believe it, you know, that's going to happen. And so they went on to say the hawkish revision came despite a softer than expected inflation report earlier in the day, and that was the CPI, with headline inflation unexpectedly dropping and the core gauge falling more than anticipated. Okay, so it dropped 0.1%. Okay, I was talking to Trent yesterday. Was it you, Trent? I said, well, yeah, now I can go out, or no, maybe it's someone else. Now I can go out to the restaurant and take 0.1% off my bill on my food and just tell the owner, hey, look, inflation went down 0.1% for the CPI. So I'm going to take that off the bill.
Well,
Okay,
maybe in Nebraska, but not in Steamboat Springs, Colorado.
Well,
this week.
you would probably get shot here, but you know,
yeah,
it's a good thing to try. So let's look at the economic reports, you know, that everyone's looking at. So we had the CPI come out, this Consumer Price Index. It was unchanged in May on a seasonally adjusted basis. They do a lot of adjustments on this after rising 0.3% in April. Over the last 12 months, the all items index increased 3.3% before the seasonal adjustment. So we're still rising 3.3% for all items, more than offsetting a decline in gasoline. So gasoline went down. And I know here, I think I just paid $3.09 for gas here. You're probably paying a little more out in Steamboat. And I don't know what it is in Oklahoma. It's probably around that area.
It's about, let me look out the window here. I think it's 389.
Wow. Okay. So yeah,
so it's higher, but you're also in the middle of nowhere once you step outside of here. So they got you captured.
Well,
yeah,
I live in the middle of flyover country, so
right. I suspect when I get to Cheyenne tomorrow, it will be back in the low threes. So
yeah, and by the way, yeah, Trent is actually going to stop by tomorrow. He's going to stop by in flyover country, so I get to see him in person again. So that'll be fun. I went down and saw him last summer, so he's going to come by and see us. So anyway, we're looking forward to that. And I also wanted to wish Margaret a happy birthday. She's not with us today, or she's going out to her birthday lunch with her sister. So
Yeah.
happy birthday, Margaret. We'll see her in 2 weeks probably. All right.
Yeah.
So the index for food increased 0.1% in May. The food away from home index rose 0.4%. Oh, maybe I can't take that 10% off. I have to raise it 0.4%.
Oh,
While food
darn.
at home index was unchanged, the energy index fell 2% or 2.0% over the month, led by a 3.6% decrease in the gasoline index. If you go and look how they do this, and I mean, you got to be really bored and absolutely have nothing to do. But it's the way they have it all broken out by percentages. They can change whatever they want on the spreadsheet and have whatever, whatever they want in the result. It's totally crap. And the PPI is the same way. These reports to me are crap because they do not reflect what you and I as regular guys and gals are paying, okay, for what we're buying and the things that we need. So the core index, and that's all items less food and energy because we don't eat food and we never use energy, rose 0.2% in May after rising 0.3% in the preceding months. So they took out food and energy and it still rose, just not as much as the preceding month. So indexes which increased in May include shelter, medical care, used cars and trucks, and education. Index for airline fares, new vehicles, communication, recreation, and apparel were those that decreased over the month. So when I look at that, I'm looking at things that we don't really need. If I don't have money or things are tight, I'm not going on airline trips. I'm not buying new vehicles. Okay, I'm not going out for recreation, and I'm probably not buying too many clothes. Okay, and so you're looking at digging into these reports. You're seeing that the items that we don't really need, okay, outside of food and energy and everything else, those are the things that we're starting to see people the inflation going down on because no one's buying them as much as they were, and so you're seeing the demand go down and the price is going down also on those items. So the all items index rose 3.3% for 12 months ending in May. That's a smaller increase than the 3.4% increase from April. So we're down 1/10 on all items. The items less food and energy index rose 3.4% over the past 12 months. So we're still rising. Okay. The energy index actually increased 3.7% for the 12 months ending in May. And the food index increased 2.1% over the last year. So again, I watch all this stuff and I'll watch the reports come out and I'll watch Rick Santoli go out and he goes through it while he's ripping through the papers, and then they get Steve Leisman on. He has his glasses on and he's looking feverishly for page 892 where he can find something good, and so they were pretty happy with this. And so what happened in the market that day? I believe it was Wednesday. So the S&P added 0.8%. The NASDAQ was up 1.5%, all new record highs, and the Dow went down 35 points. Okay. So that was a happy day for the market because inflation is coming down. So then we had the producer price index. Okay. So factory prices in the US went down 0.2% month over month in May compared with the market expectations of a 1/10 increase. And after the 0.5 rise in April, prices for goods fell 0.8%, the most since October. Nearly 60% of the May decrease in the index for final demand goods can be traced to a 7.1% decline in the price of gasoline. So gasoline has a big factor on these indexes. So what happened there after the PPI for the markets? The S&P and the NASDAQ closed at new record highs with gains of 2% and 0.2% and 0.3%, while the Dow Jones lost 65 points. Okay, so when you look at the NASDAQ, you look at the S&P, again, we just talked about the weightings in those, and what are the weightings in those? Well, they're the companies that Paul's talking about, those are the ones that are doing well. So as swing traders, you gotta know what's happening around you and react. And Paul's reacted pretty well, and he saw that opportunity, and he went forward with it, and it sounded like a good week. So I just wanted to say, I've been watching the media and government officials, and they're just perplexed as to why Americans are not feeling all this good information, Why aren't they feeling the inflation going down? Why aren't they just happy, you know? And I'm looking at it, I'm like, well, we have unemployment went up to 4%. Okay, we're seeing more and more record highs over the last year of unemployment claims. Okay, we see a record amount of credit card debt in this country and delinquencies and default. We're seeing auto defaults at the highest level and repossessions of autos. When you look at the jobs reports, we looked at this the other day, the 2Regular Guys show, you know, we have more part-time jobs being created than full-time jobs, and that's from the household survey. And we have higher interest rates. So you have all that, and you combine it with 65%, you know, of all Americans live paycheck to paycheck. And that includes 36% of those making less than $200,000. Okay. And then you think about 20% of Americans have no savings. And then 30% who have savings don't have enough to cover 3 months of expenses. And so then you look and I'm like, well, why can't they make it? You know, if everything's coming down, well, you know, it's inflation. Okay. And if you go look at what they count in inflation in these index and the weight they put to it, it's not representative of how we live. Okay. So look at home prices, you know, since 2020, they're up 34%. That's from Case Shiller. Mortgage rates are up 152%. These are all part of inflation. If you're going to go out and pay it, you're paying more. Auto insurance, anyone do their auto insurance lately? 51.3% according to the Bureau of Labor Statistics. So I just wanted to go and look a little bit at the things that I would use or that we would use. And see if I can get there. And just look at it going back 4 years, okay? So I've got this nice little program. Can you guys see that?
Yeah.
Food and beverage. So I plugged in $1, 2020, 2024, and it'll take every aspect of the Bureau of Labor Statistics, CPI, and tell you from 2020 to 2024 how much it went up. So this is for food and beverages. If it was $1 back in 2020, so according to statistics, price for food and beverages are 22.13% higher than in 2020. Okay, so if you look at that, and they even calculate that, that's 5.12% per year. Okay, on food. All right. In 2020, that was 3.34%. Okay, so that's a bit higher. So, let's see if I can get this here. Yep, let me see if I can get this. All right. Electricity. Let's look at this. Oops. It's not what I wanted. I've seen it on my charts. Those are the ones I post anyway. Why won't this come up? Come on. All right. That's not working. Try it again. There we go. Electricity. Okay. 2020, 2024, 29.1% higher versus 2020. Okay. That's 6.6% year raising in of electricity per year. Okay. In 2020, it was only going up by 0.5%, basically.
Is that, do you think, because there's such more demand in the last 4 years on the electrical, grid because of all of this?
That and what is electricity made of? It's made of coal. It's made of natural gas. Those prices and commodities have gone up.
True.
And demand too. So here's all items, just all items from, you can see we talked about this, 20.45% higher. Okay, that's 4.75% per year on all items. Okay, and it used to be in 2020 it was 1.23%. Now it's 4.67% per year. Fuel oil. So here's part of it. This is fuel oil makes electricity. Okay. Paul, you're up in the Northeast, you probably have a lot more fuel oil than we do. But fuel oil over the last 4 years up 77%. Okay. 15.29% per year. In 2020, it was actually down 22.8%. Gasoline, is that a good one? Gasoline, okay, from 4 years ago, 56.82% higher. Okay, so that is an average inflation rate of 11.91%. Everybody uses gasoline. Okay, this is a big factor. Okay, back in 2020, it was actually down 16.85%. Okay, so that's a huge swing. Okay, housing. Now, these are just things that I use. Okay, that you need. Housing, it's up 21.69% or 5.03% per year. Okay, used to be prices changed in 2020 only 2.19% to 5.03%. Okay, these are big swings. Think about what we talked about, people's salaries and people living paycheck to paycheck. Car insurance, here we go. Car insurance, 50.72% higher. Okay, so 10.8% per year on average over the last 4 years. And in 2020, it was actually down 4.62%. So you're seeing a huge swing car insurance. Everybody who has a car has to buy insurance. It's required everywhere. Okay, so you don't have really a choice in that area. Car maintenance. Got to go get your car maintained. 31.24% higher. Okay, it's up 7.03%. And in 2020, it was only up 3.38. So we're up, 4 or 5% on that. Anyone have pets? Yeah, we do.
Yeah.
Pets, so what, 23.16%, 5.35% per year. It was only 0.1% back in 2020. So yeah, pets, which a lot of people do. What else do we have here? I have rent. Okay, if you rent, okay, it's gone up 21.54%, 5% a year. It was 3.12% in 2020.
So, Mark, let me ask you this question.
Sure.
The average there looks between 4 and 6% on
Mhm.
average. Would you say when it came to inflation, in a sense, is that more of what the average looks like? Or, you follow what I'm saying?
Well, that's inflation rate. So that's the price of things going up on
Yeah.
average. So like here, this is services, up
20%.
20.2%. So services are up, on an average inflation rate of 4.71 per year. Now, these are just average out. 1 year could have been, higher. 1 year could have been lower.
Sure.
It just depends, But again, in 2020, it was 2.11%. Now we're at 4.71%. So all this is inflation that we're paying more. Okay, so if you are on fixed income or you don't get more of a pay increase, in the last 4 years of 20%, okay, you're behind.
Right.
And then we talked about we're not even factoring in, purchase price, purchasing power of your dollar.
Yeah.
With all the deficits that we have and all the spending that we have, our dollar, our purchasing power has gone down 12%, last year, 12 to 20%. So add that on top of all this too. And we got one more chart. Okay.
So it really justifies the 15 to 20%
Yeah.
element of,
So look at transportation just in general, it's 34.56%, 7.7%. Okay. And it was negative 4.16% in 2020. So with that, along with purchasing power, you can see why people aren't happy. Okay.
Yeah.
And so it just drives me nuts to watch all this, the people who are making $1 million contracts on these financial channels or government officials who are trying to justify their jobs to come out and question us regular people of why we're not happy. Okay. And
Yeah.
luckily, a lot of us being more retired and probably have saved some money, we're probably doing better than the average American, which is great. That's why we're here, you know. But I know a lot of people that aren't doing well, you know, and it's a lot of people in this country. So, um, it just gets a little tiring to see that. But it got me so worked up this week that I just had to go and look for myself to see what I was seeing. So
Yeah.
anyway,
I was talking to Haley, that's my daughter. Some of you met her a couple Fridays ago, on Kerry's call. And we were talking this morning, and she was talking about how her friend, a real good friend, became a real estate agent at the first of the year. And they got into a intense discussion back in April about housing prices in our area. And my daughter was like, you just wait, you'll have housing, you'll have opportunity to buy houses in our area, not on the beach, but off the beach, in smaller homes for under 300,000. And she's like, that'll never happen again. Right. So Haley and I are talking about it, and she goes, yeah, unfortunately for her friend, she's yet to sell a home. She's had 2 people back out, and she's young, she's 21 in the real estate game. And but she's had 2 people back out of contracts, and now you're seeing more and more places, and these are condos or very small homes off the beaten path in my area. They're now under 300,000. And even Haley said to me a month ago, there was barely any condos in her vicinity where she lives off of Highway 30A. And now there are just dozens of them. And what we're seeing, and I'm actually seeing in my neighborhood, a price war going on with people I've got 5 homes, I think, for sale in my neighborhood. And 3 months ago, there were none. And now they're fighting, they're undercutting each other. And so I'm looking at this, and the one thing that's not potentially inflating is housing prices. You're starting to see people are realizing, I'm not going to be able to sell this at what I thought could sell it for, which was 2 years ago. But
and
now,
that's some psychology in your head is now I'm not worth as much as I was 2 years ago or 3 years
right?
ago. So not only am I paying more, I'm actually my net worth has come down because the assets I own have come down.
Yeah, exactly. And
And
most
you
people's
said, I
biggest
think you
asset
told
is
me because you're in a resort area, like less than 10% in your area, people actually live in the houses that they have there, that most of them are Airbnb kind of
yeah.
thing.
So I looked it up, I think, a couple Fridays ago, or maybe, and I think we have 20 in a 20-mile radius of us. We have 20,000, just right under 20,000 people living there full time. Yet the number of second homes in the area is just astronomical. If we have 20,000 full-time residents, there's probably 100,000 homes in the area. So 80,000 homes are second homes. And a lot of them were probably bought since the pandemic and interest rates went to so low. And now you're seeing the number of houses on the market just skyrocketing. I remember in 2010, you could drive down 30A and there was for sale sign everywhere. Everybody was trying to just get out. Foreclosures, the foreclosure list was high. That changed when interest rates got real low, especially into 21, 22. And now we're seeing more and more for sale signs. It's, reminiscent of 2010.
When I think a lot of that are people dumping their second homes and Airbnbs because they're not renting them. Because I know when we look to come down there, that every year it's a lot less to rent one than it was
Yeah.
the year before.
Well,
Because
it's like Haley and I were discussing. We have a mutual friend who is unloading a place in our area, and he's doing it because his business has slowed so much. He has to raise cash, and he's not a small business. He's like, this is not going in the direction. So I'm unloading assets that are not needed. And one of them is a place on 30A. And I'm like, good luck on selling it, especially at the price that he thinks he'll get for it.
yeah,
Is
So,
Scott seeing that? Scott's wife is in real estate.
Yeah.
What is he seeing? Are you seeing along the same lines?
In this area, it's a college town, so we're seeing a lot of parents buying houses for their kids to go to school in. So it's not like the regular market in Norman, Oklahoma. They're still buying. So we have a market here. Houses don't stay on the market for very long at all in the area. Now, up
Yeah.
in the city, in Oklahoma City area, they do. It is a little bit different market where they do stay on the market. The high dollar houses, they do stay on the market longer. People that want to sell their houses quickly, it's like Trent was talking, they do last a little longer
Mhm.
on
I
the
think
market. So
I look
yeah,
at my area as a leading indicator to small and mid-sized business owners, in that a lot of people came down and paid cash for the homes in my area. A lot of them got at real low interest rates, and now you're seeing, like, I get a email from Redfin probably daily now with price adjustments, and people are lowering their prices. If it's 10,000 or 200,000, it's increasing, and to me, that's a little bit of an indicator of what the business owner world is facing right now, and that is uh, shrinking revenue, shrinking margins, and they're looking at the assets they have and go, okay, what do I not need? How can I raise cash? And secondary homes, vacation homes is a big leading indicator of that.
And I think the second wave will be when, if the employment rate keeps going up and people start losing their jobs in mass, because
Yeah.
then they won't be able to afford their homes. And so they're going to go on the market. And it may be connected. And we talked a little bit several weeks ago about the commercial real estate fiasco that's going to happen at some point with these higher rates and the refinancing of that. And the fact that we have so many empty office buildings sitting around. And again, I think I saw another building in New York City, go for pennies on the dollar again this year or this week, and how are things up in you're up in the Northeast, Paul? How are housing situation up there?
I'm just because me and Christine, as a hobby, we go look at. Our dream is to buy, a little cottage on the shore. So we're constantly looking along the sound, and those homes are just starting to, I'll say, stabilize, because we go weekly and kind of say, oh, they went up a little, they're selling about this much, and now they want a little more, now they want. But now it seems like there's more homes for sale, and we're just starting to see price cuts. So people are few more homes and a few more price cuts, and we're like, can this be a turn? We don't know if we're getting faked out or not, but we're surprised to see that now.
Yeah.
Honestly. Yeah.
So that's kind of a synopsis, at least where the four of us are, that it's different. And I think Eric is in Chicago. How's housing in Chicago, Eric? Are you still there? Are you there? He's muted. Maybe he's not there. But yeah, so if housing goes, a lot of things go, because there's so much involved in owning a house and maintaining a house and all that. And the interest rates again affect that, because I've negotiated mine down to under 3%, during the whole deal. And so if I were to sell mine and wanted to go refinance, I'm looking at a 4-5% increase in my percentage. Not only that, what we say on the housing, 30% increase in the housing price right now.
Right.
Okay, so if I were to come and buy the house that I built here 25 years ago at these rates, at the value that it's worth now, I wouldn't be able to afford this house, which is really weird, And I think
The
a
new
lot of people are
generation doesn't want a house. The new
What's that?
generation don't want. The new generation doesn't want a house.
I would argue against that. I would.
You've heard that though, right?
Oh yeah.
Yeah, I've heard it.
Yeah,
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 just
yeah.
like inflation's down and everything's good.
Right. I have a daughter who wants to buy a house. Her friends, who are married, are buying homes. They're buying them at ridiculous prices and ridiculous interest rates, but that's all they know. And I think the American dream to own your own home is still there. It's it's so far out of reach right now for most people. And until that balances out, I don't think that generation, I mean, that generation could go into their late 30s before they buy their first home.
That's
But if
sad.
you buy now, you could potentially be underwater here, depending on how you forecast what things are doing and how you forecast where you think the economy's going. But for me, I don't know how we can sustain in the country the debt levels that we have at these interest rates that we're having, $1 trillion of interest, and what are we borrowing $1 trillion every 100 days now?
Yeah.
I just don't know how that's going to play out. I can't figure it in my head, And
You
even
mean
if I dust off my economics degree, Paul, and try to figure that out, I can't do it.
I think, correct me if I'm wrong, you're saying if you were to buy now as a new home buyer, that there's good potential that you can go underwater because the value of the house may go down? Is that was your point, kind of? Or
The
no?
value of the house may go down, and you still have a mortgage at that higher
Right,
rate, at higher
right.
percentage rate, and the higher price.
So it's very risky from that point of view.
Yeah.
From my point of view,
Yeah.
I think for me, I'm looking at this as kind of like Warren Buffett. I'm sitting back, and like we've talked, Paul, we have stuff in treasury bills, and there's going to be a fire sale, I think. I'm already seeing it. I do, as you guys know, I do older vintage cars, and I'm already seeing that vintage car market, cheapening up to a point where some of the car prices look pretty good. And so,
You've been seeing that for a little while now. I was just curious, like, have you been seeing that for like a year or 6 months?
for about a year I've been seeing it. They're not at the price I want to buy them yet, but they're getting close,
Well, you want half price, Mark. I know that, but you're seeing them.
Well,
Yeah.
I'm the machine the other way,
Yeah. You want to buy it at the 200 J.
I'm the reverse repo machine.
Yeah.
So yeah,
Right.
it's
Yeah.
I mean, but I'll wait. I don't need it anymore. But I watch that, and I know that we've been watching kind of down on the Gulf Coast and real estate down there too at some point. And we'll see what happens. But that's just my view. I mean, just looking at what we just went over, looking at when these reports come out, everyone's excited. Dig into them a little bit, and again, Jan does our groceries. She's like, we're paying more than 25% more than we did, and I believe her, then getting less,
Yeah.
And again, I don't get my chocolate donuts anymore. I've been inflated out of those. So
That's not good.
I know she won't buy them anymore. They're too high priced, so I don't get them. So
Well, you got to do what you got to do.
I know.
Yeah, you
So
got to chip in.
Let's talk about a few more things, and then we'll look at some charts. And I want to see what you guys are doing this week. If anything, look at your chart. We'll look at charts, and I'm going to go into crypto a little bit because I've been watching crypto, and I believe crypto and AI, as Trent does, are interlocked at some point, and that they're both going to be potential money makers, not financial advice or anything. But to me, I believe what's happening this week. MicroStrategy with Michael Saylor announced that it's going to offer subject to market conditions a $500 million aggregate principal amount of convertible senior notes due in 2032 in a private offering. So they're going to offer these convertible notes that can be converted into MicroStrategy stock, or he'll pay you interest on it until they mature, or there's an option for him and that company to just buy you out at any time and give you shares or whatever. And I think he just closed out a $650 million convertible, but he's going to do $500 million, and they intend to use the net proceeds from the sales of the notes to acquire additional Bitcoin for the general corporate purposes. So he's still buying. He's on a buying spree, and I believe he is still the top corporation with the most amount of Bitcoin in their treasuries. Now, I think like the ETFs have had more than he has, but they're not private corporations. And when we talk about spot Bitcoin ETFs, they've acquired an amount of Bitcoin equivalent to nearly 2 months worth of mining output in just the first week of June. Mining output is 450 Bitcoin a day total. Okay, so they acquired these 11 ETFs, nearly 2 months in a week of that output. Okay, so this influx highlights the growing appetite for Bitcoin as a financial asset and underscores its increasing integration into mainstream investment vehicles. During trading week from June 3rd to 7th, the 11 active Bitcoin ETFs in the United States collectively purchased 25,729 Bitcoin, which doesn't sound like much until you know the value is $1.83 billion. Okay. This acquisition is nearly 8 times the amount of Bitcoin mined during the same period, which is around 3,100 Bitcoin. So during that period, 3,100 Bitcoin were mined, 25,729 were bought just by 11 ETFs. That doesn't include the other ETFs in the world, does not include the people like Michael Saylor or the Kansas City Cattle Company that are buying and putting in their treasuries, does not include the banks or sovereign nations who are buying Bitcoin. So it's at a point now, and we'll look at a chart where supply and demand. I mean, the miners are not selling everything that they mine. They want this Bitcoin too, so it's coming from somewhere. And I think a lot of the older people who might have had early adopters into Bitcoin maybe take a little profit off. And again, you don't have to trade Bitcoin through the exchange. They can go to the OTC and do it off the exchange too. So it'll be interesting to watch, and we'll look at a chart. But I still think it's worth a little bit of a look as a part of anyone's portfolio now, as it's been, approved by the SEC. We have all these ETFs out there. It's so to me, it's digital property, digital store of value, like a gold. Only you can put it in your pocket and take it with you when you move to Belize or wherever you want to move to. So we'll take a look. You have anything to say on that, Trent?
Yeah,
You kind of put it into the AI look, and I'm seeing a lot more stories connecting Bitcoin and AI in the future.
yeah, I think, with artificial intelligence coming on so hard, the one big issue and challenge is security. And if you look at how the cryptography behind Bitcoin and a lot of these other crypto assets, the one thing they're very, very strong at is security. And from my knowledge, Bitcoin has never been hacked. It's never been altered because of the structure of it. And as we have artificial intelligence become more and more and more a part of our lives, more and more need for security and encryption is going to come into play. And I think that's where these two roads sort of come together. And I think crypto, more security will be, or more platforms will be built on a crypto asset sort of platform because of this security. And I'm starting to see, that's where I see these two coming together in unity, and you see more of this programmed, and just the infrastructure of how Bitcoin is structured, and how it's verified on a purchase or on a sale. It's not just one, center that is being verifying it. It's millions of centers or computers that have to verify that, and to alter those ledgers is virtually impossible. And so I think that's where, when it comes to security, you're going to see more and more software, more and more technology built on a crypto platform structure going forward. And I think that's where they come together. And that's where you could see a potential pop or move higher over the next number of years in crypto because of the use case of it as well.
I'll put a chart up here.
All right.
This is about a year chart, just to show you where we are. We've been in this kind of a sideways consolidation pattern after the halving. What day was the halving? Was that in
April 17th or 19th?
About in right about in this area here.
Yeah.
So we see there was a rise, and now we've kind of consolidated, and we're seeing a little bit of a dip down to the lower Bollinger Band. The thing that I see, let me go back to today. The thing that I see when I look at the trends in top and bottom is that, let me get a little closer here. Is that we're kind of hitting this bottom trend line. And we'll see if we break through that, because it's been kind of a wedge. And we'll see what happens today. We're kind of below it, and we're below the 50 and the Bollinger Band. So again, we look down, we see the MACD, and we're seeing the stochastic, the RSI, all down. If we go to a weekly chart,
Mhm.
let me go to a weekly chart. Okay, I don't want that one. I want to go to a weekly chart, not 60 minutes. Weekly, here we go. Okay, is this weekly? Looks like it.
Yeah, it looks like it on a weekly chart. It's getting close to its 20
Yeah, let me get
week
rid of
moving
this one.
average. And it seems like there's nearing support in that area. In my opinion,
Yeah,
and if we can hold above that, what weekly is at? According to my
well, the 9 is
63,
at
60.
65.7 is the 9 right now. We're trading at 65.4, so we're right about there.
Yeah. So on a weekly level, I look at it and I go, okay, well, we could see over the weekend easily get to 63, bounce off that, and make another move higher. It's just a matter of, I honestly think this is a accumulation phase, and you can see it going back to March, on a weekly chart. And we're just going to bounce through this for a while until an event or the accumulation has met its target, and then you see a move higher.
Is this 1 year? Is that what this is?
This is weekly.
Right.
I just scrunched it up. This over here this is November over here. I can put it on a year. Hold on a second. There we go. There's your year on a weekly chart. So you see, we just kind of been bouncing over the 9. The thing I don't like is right here, this MACD kind of bouncing down, and then the stochastic bouncing down on a weekly. So we'll see if we close below the 9 today. But you can see on a weekly, we have used the 200 or the 20 as resistance also. So what Trent was saying, if it goes down and it follows history, the 20 is at 20 weekly is at 61,241 right now. So that would be about 4,000 below this. Again, I don't swing trade Bitcoin. I will dollar cost average in on Bitcoin. I've been doing it for a long time. So I see this because of the supply and demand issue. For me personally, in my personal situation, as a good opportunity to have some pretty good gains or losses, because it can go down the other way too. I mean, everything's a risk, but I think when you look at something like this, it's a technology, it's a store of value. I truly believe that. I spent a lot of time looking at it, and that's for me personally. So they have the ETFs. If people want to get into it, you can get a Coinbase account if you're in the right state. Paul, I don't think you could have gotten a Coinbase account in Connecticut, could you?
No, I have Coinbase. I couldn't get a Fidelity account.
Oh, that was it. Okay. A crypto account, Fidelity crypto account.
That's correct. Coinbase is pretty cool. I got Coinbase on my phone. I've been using that.
Yeah, it's been around a long time, so it's been pretty good. Let's go back to the daily here. Daily. Oh, where'd it go?
Yeah.
Where'd it go? Let's go 3 month. There we go. 3 month daily.
That's sideways.
So, yeah.
Yeah.
That's the daily. Yeah, it is. I mean, if you look at it, we're down at the lower Bollinger. We'll see if we can pop back down, but I'm looking at the 9, the 20, all kind of doing a little bit of a dive. We've already been, right here. You can see that's where we crossed the 9, right where the MACD started sliding.
Do you know the ticker for the other one? The ticker for Ethereum or something like that? Is that
Ethereum?
still
Ethereum?
Yeah, there. Yeah.
This is Coinbase.
Yeah,
So we'll go back a year on Coinbase and take a look at Coinbase. Oops,
I thought that's like up 200% this year or something like
it's up a
that.
lot.
Yeah, but not 1 year. Oh, no, I guess so.
Yeah, you look back here is this is February. This is about when the ETFs came out for Bitcoin, and you'll see it right up, and it's pretty much the same almost as a as Bitcoin itself. And if you look at MicroStrategy, I was looking at the gains in MicroStrategy, and they're better than I believe than Nvidia. But here again, here's in January where the Bitcoin ETF came out, and boom, and then we came back down. This was back in May, and then this is where the halving happened, right in this area. And we're back up, and there's all kinds of mathematical geniuses out there that have their models. But as Trent was saying, just even on the daily, you can see the consolidation, and winding up, and we'll see what happens and where it goes.
I think Coinbase is one of the stronger stocks when it comes to
Profitability.
playing the Bitcoin game.
Yeah. So
Because
this is MicroStrategy here. Let me
yeah,
go back to Coinbase.
yeah. But I mean, if you're building a crypto exposure, a combination of say MicroStrategies, Coinbase, exposure to Bitcoin, I prefer it from outright owning it versus the ETF. But these are two or three sort of legs of the stool that will be a big part of where crypto goes in the future. So it's
This is
easy.
classic here. Do you see this cup and handle? Here's your
Yeah,
cup.
yeah,
Here's your handle.
yeah,
And then it went up. It went up just about to the T. You go from here to here, and
uh-huh,
that's about where it went.
yeah,
And look what's happening here again, almost.
yeah,
So
yeah. You'll probably have a move up to what is that, is it 212.14, and then probably a pullback down to what is that, 248, and then that's where you would get that move higher if it is a cup and handle.
yeah, here's your weekly.
Mm-hmm.
So you see we're above the 9 on the weekly. Look at this Bollinger Scream up. Look, here's the 20. Had a little flat on the 9, but
Yeah.
crossover on the MACD. So these are volatile. But I think in these areas like a MicroStrategy and a Coinbase, along with that. Let's go to EBIT.
IBIT.
Oh, I bet. Yeah. And this is the BlackRock ETF. So they've just gone. I think they're over 100 days now since they've been doing this. Oops, this is weekly. Let me go to daily first. Check it out. There you go. You'll see these follow the price. I mean, the charts just look like Bitcoin. Okay.
Yeah. What's great about this is you could just take the name off, and by applying these technical indicators, you can track and position based on the behavior of these indicators, with your slow stochastics, your RSI, your MACD, and then your simple moving averages and the Bollinger Band. It's you can apply it to anything.
Pretty much.
Yeah.
This is weekly since they've started. Oops. If it lets me do it. So yeah, this is back to January when they started. So it's kind of been in that kind of sideways weekly consolidation look also.
Yeah.
So, so that's what I got on that. I don't know why my NVIDIA chart's not working very well. So it's not giving me anything. What was the other one? Adobe, ADBE?
ADBE is a dope.
This is the one you were talking. Oh yeah, look at that gap. earnings.
Oh, I'm not in that. Who was in that? Fire Duck.
Yeah,
Yeah.
he likes to play the earnings.
Yep.
Yeah, I don't care for it that much. In this case, it was a winner.
Yeah.
But that's a huge gap. And you can see it. Here's the MACD, everything, boom, boom, boom. And when you see that, you see the Bollinger spread out. So again, it's not quite to the 200, but what a jump on it, huh?
Yeah.
$66, 14.5% today.
Wow.
So, yeah.
If you look at the history of earnings on Adobe, though, you wouldn't. It's not a happy place.
You know,
Really? Okay.
there's a lot of talk on like Instagram and TikTok about how these other graphics programs like Canva and are really just trumping the Adobe programs because they're easier to use, but also the pricing is way better than
Mhm.
say if you got a Creative Cloud program from Adobe. Um, uh, but yeah, I think when it comes to their growth, it could be stifled
Yeah.
for sure, and especially with some of these
Yeah.
AI programs where you can type in a description of what you want to create and it'll create it for you.
They will steal market share.
Oh yeah. Yeah, I think it's happening already. I mean, I use Canva all the time because it's easier than using an Illustrator or Photoshop by
Uh,
Adobe.
I'm worried about SMCI because of its competition. There's
Yeah.
other people building data centers using NVIDIA chips. It's not just SMCI.
Yeah.
So
Yeah.
And then
I
I
don't
think
know.
the
I would.
SMCI is
Yeah.
much more narrower, um, off product offering versus say a Dell, who has more reach in both retail, the individual to small business, um, versus MCI.
That
Here's the
doesn't look fun.
here's the reverse. Here's the earnings reversal here. We had
Yeah.
the gap down. Yeah.
Yeah.
Yeah. Look at this. Now we're starting to roll a little bit. We'll see what happens. But
Hmm.
you see that a lot. You'll have earnings, they'll fall down, and then you get into this consolidation. You see from the Bollingers are starting to come together. This one will probably start coming back up if it continues to move sideways along the 50 here. But these oscillators aren't looking too good yet.
I got the
What
sense
else?
from the report that they weren't getting a lot of profit. They had a lot of revenue, but big
Right.
big sales numbers, but they're not making a lot of money. So
Let's look at HP. There's HP. See HP earnings here. Boom. And now it's in a consolidation right along its intermediate resistance level. But yeah, look at these moving averages starting to scream up just following that. But that was a good play right there. I tell you what, this would have been a sweet swing trade had I found it right here. Where you get above, well, God, you're above the 200, you're above everything, and boom, look at that go. Of course, I would have got out here myself. Fire Duck would have got in, he would have made that.
so if you put up Skyworks,
Okay.
SWKX, shit. So let me see.
SWKS, yeah, SWK.
Yeah. So I look at that and I'm like, oh man, it's very interesting. This is their supplier to Apple,
Hmm.
but I couldn't. It's like reach like right where earnings is, so it's come back
Yeah, look at that.
to
Yeah,
where it
right.
once was.
Look where that is. That's the intermediate
And,
resistance level.
but if the future is bright for Apple, if I'm truly an Apple believer, which
Yeah.
I have, as you know, I own a lot of Apple, then I would invest in Skyworks. And I'm mad that I didn't because years back I was in Skyworks because I was in Apple, but I forgot. But I don't know. I'm gonna keep an eye on this one. It looks like it. I'm late to the party though.
There's your
Maybe.
2 year. I mean, it's still,
Can you compare that to Apple?
yeah, I think so.
Do a compare.
Yeah.
You just
Compare.
yeah, beautiful. APP.
Yeah, got it. I'm trying to figure out where. Oh,
Almost.
APP. Yeah.
Or is it AAPL? Is that what it is? Yeah.
2 A's PL.
2 ASPL. Okay.
I think Okay.
There we go. Okay.
So look at Apple. They went hand in hand for a long time, and then Apple jumped recently, but Skyworks is catching up. Like it jumped too, but not at the same magnitude.
Yeah, this is Apple here.
Yeah.
Hmm.
I don't know.
Yeah, they are similar, aren't they?
Well, yeah, and the price per earnings on Skyworks is 20, so it's not like a
Not
crazy risk.
overpriced too much.
Yeah,
Yeah.
it's not an overprice. But anyways, what I like about Apple is if you look at the weekly, it gets me excited. So I've been
And when Paul's excited, that's a good thing.
I've been focusing more on the weekly than the daily because
Yeah, that's not a bad
I
thing to do.
I sleep a little bit better knowing that it has a track record of
What was
multiple
the other?
weeks in a row.
What was the other one you were
Um,
talking?
if you take a look at the weekly, I have 3 stocks, but I'll even consider for weeklies. TJX, which just the industry I'm a little worried about because TGX, it's getting its merchandise from Macy's and all the other places. So it's an inflation play. So we might be out of gas on this, but you can't beat that weekly if you look at
This is Apple.
it's a
Let
tough.
me get rid
That's
of.
a Oh, okay. So that's Apple.
And I get rid of some
What
of my
if-
crap in here.
But from a weekly, look at that weekly. Yeah. So I don't mind trickling a little every once a week or so, twice a week.
Yeah, you just had a crossover, golden crossover of both the 20 and the 50 on the 9 here. So, yeah.
Sounds like Apple's going to put the need to learn mathematics out of business. The way you can enter your formulas and stuff to calculate your questions on Apple's new calculator it's like you're making it harder for kids to learn math now because now they can just get online, get on the
Well, I
calculator and
remember,
do it.
I'm old enough to remember when the 4-function calculator came out and it was hundreds of dollars. And if you had one in your class, they would never let you use it. You know?
Yeah, well, yeah.
Okay. Here's
So
another one that's been really doing well. And I know, Paul, you're in it. And
you
that's
gotta love
Lilly.
Eli Lilly. Yeah.
Yeah, look at that. Let me get a little closer here. Let's do 6 months. Yeah. I actually put it on the watch list right in here this week. You're starting to see a little bit of a roll. Here's some sells, but again, that was a nice run. Still is. Everything's moving up. So
They just got another drug approved.
really,
So yeah, it's
anything else you
that's
guys want to look at?
I like
Anyone?
Costco.
Costco.
COST. I'm gonna, you guys heard me. You're probably tired of me bringing this up.
No, I know you go there a lot. See, look at that. It's right on my green line in the sand. It'll be interesting to see if that'll break through
Now
there.
it's going to be interesting now. So,
Look at this right here. You're
oh
starting to
boy,
see a little bit
yeah,
of a
little
roll.
roll.
So that doesn't mean that this can't move. These move based on the data, but we'll see. But it's been there 1, 2, 3, 4, 5, 6 days. Go back and look at the weekly. And let me give 2 years on the weekly. There's 2 years on the weekly. So it's a nice weekly chart. Here's where your sells are. 861. We are sitting
Right.
at 853.
So I'm in that. I'm not going to sell that unless we get turnover. Get some big reason to sell it.
Let's look at Walmart. We'll compare it. There's
Oh,
Walmart.
Walmart. Yeah, Walmart had a nice run too.
Yeah, this is the weekly on Walmart. What'd you say, TJX?
Yes.
Max?
This is cheap places to shop for food.
Yeah. Yep.
Yeah, we touched upon this last week.
We did. Yep.
Yep, except and we talked. MK had
Except
Ollie's too, but Ollie's tanked.
Here's
Yeah,
Dollar
Dollar
Tree. Cheap place to shop, but yeah.
Right.
I mean, that almost looks exactly like this here. Boom.
Yeah.
So this is a potential, on your dumpster list. These are the kind
Right.
of ones I like to watch when when it finally catches up, the 9 catches up, we do this, you know?
But didn't they have a managerial problem? Some type of,
I
there was
don't
some,
know.
yeah, there was something
Let's
in
look
the
at,
narrative,
let's look at
negative.
Dollar. Here's Dollar General, so they're kind of doing the same type of thing.
Yeah.
Let's look at a high end, Ralph Lauren. There's Ralph Lauren. So it's come up. Look at Ralph, man. He's hit the green line in the sand several times, trying to get past it.
What's
What
the
was the
other
one we were
one?
looking at? What ZTS was the one we were looking at this week, Paul?
Yeah, that one
That
went
one
under the
came up.
200.
Yeah, and I said it's got to get past the 200, you know, and that's the weekly. We were on the daily when we were like, let's get it where we were. So yeah, let's get it. Oh, 3 months. That's it. Yeah, I mean, I had it on the charts of interest right here. Now, that's not a buy list, but I think I put in the notes, we want to see a back test to make
Yeah.
sure it gets over the 200, and it just never did. It just never could get over that 200. That's just a tough level in some cases for price action to hit. And so didn't get into that one. When you look down here, you're looking at right here, we're seeing a little crossover on the MACD, which I didn't like that much, but those can reverse too. And I mean, this is stochastic, which is kind of a precursor for me to what happens in the MACD. And you can see here it did crossed over in the MACD a couple days later. So this one's kind of tells me the slow stochastic. This kind of gives me a precursor of where I think the MACD is going to go and where I think price action is going to go. So
I did the opposite direction on TLT yesterday. I bought a mid-July put on TLT.
Whoa.
Yeah, and so if interest rates, 10-year, 30-year treasury yields have gotten down to a lower end, I think a 10-year was at 4.19%. If the yields go up, this TLT will go down, and
Dave's
just
pissed.
what's that?
Was it Dave last week? Remember, he
Yes.
said he wanted to get out of TLT. He's pissed. It went right back up
Yeah, it made a move, from $90
from last Friday.
range. Yeah, 91.
Last Friday, he says I'm selling on Friday. Probably sold on Friday.
Yeah,
well,
so
he still
on the
I think he
11th.
still made
Still made money.
though.
Yeah.
But look at this. I mean, the bond market's been so sporadic. Look at all the gaps. I mean,
Yeah.
in a trade like this, gap, you know, and here we are, gap. You know, it's all over. Look at this one. Jeez.
What's
You know?
interesting, if you're looking at it from the standpoint of trading it, it's the yields are trading within a range. And when we start to see, mortgage rates below 7, they don't stay there long recently. Because mortgage rates are based off the 10-year for the most part. And so now we're below 7 on the mortgage, 10-year or a 30-year mortgage rate yield. The 10-year yields down, in the low, 4.19 or 4.20. And I look at that and I go, well, that's TLT going higher, but now there's resistance for TLT and yields are at, and this is where I think, this is the teeter-totter movement in this. And if you're looking for a trade, not really a swing trade, but a trade, it's something, is becoming very, in a way, not close to predictable, but, still has some room there. But yeah, I bought just one contract, mid-July, put contract on this, and we'll see if we get a movement over next weekend and make a couple bucks.
What that contract cost you, if I may ask?
20 cents, I think. Excuse me, 23 cents. I'm a bit negative in it. It's trading at 22 right now, but I've got if I can get up to 40 cents on it per share, so that's $40. It's a nice little bump. So not risking a lot, but just sort of playing around with what bond yields are doing.
This is Tesla. look at how flat. I mean, look at that trading pattern, just straight.
Yeah.
You know, they got the
That's a
bump
function of
yesterday.
that's a function of Elon's tweets.
Yeah, I mean, I mean, just look how traded in consolidation. You know, and look at how narrow the bands are on the Bollingers. It's still coming. You know, went up above, now it's back down, right back to the 9 basically. You got this 200 still trending down, a little bit of a tick on the 50 that's been trending sideways. So we'll
Mhm.
see what happens with Tesla.
Hey Trent,
Yeah.
do you remember 3 months ago or so, you had mentioned someone who was in the hospital and you seen the Da Vinci made by Intuitive Surgical, the ISRG is the ticker, ISRG.
Oh,
I
here,
don't think
I'll put it up.
I don't
It's
think
at a
that was me.
52-week. Yeah, it was you.
Was it?
Yeah, well, you said, geez, I'm in the hospital and I noticed
Oh,
they
back.
have a robot. And I'm like, yeah, I know
Oh,
that
oh
robot.
no, that was my wife. She had surgery, and
Okay.
the doctor sat across the room with basically a Microsoft X game PlayStation, whatever, and did the surgery. And it was all, 3 robotic arms that did it. Yeah.
Mhm.
Wow.
Yeah, I had this for a while and I got frustrated with it, but
Yeah.
I'm wondering how much of this is going to be AI. I
I
don't
think a
know.
lot of this, I was thinking about this the other day, and I don't know how these things enter my brain, but if I were coming out of high school and I was going to go study, go to college, what would I study? And I thought, well, I'd probably study computer science with a second major in biology and a minor in accounting. And because I think with artificial intelligence, it's going to be a big player in the whole medical world, especially with, testing, vaccines and drugs and stuff like that. It really comes down to computing power in the
Yep.
end,
Yep.
kind of thing. So,
So this one's a good one.
yeah,
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 looks like
might
it's
be a
man,
little.
looks like it hit my green line of sand up here.
yeah. I think, looking at the technicals on it, I'm like, you're right. If you had gotten back in, what is that, is that a weekly or a monthly
This
or a
is daily. This is
daily?
daily.
Yeah,
This is early May.
yeah. If you had gotten into mid-May, you'd made a you'd made some money.
Yeah,
Yeah,
and there wasn't a lot of risk back then either. But what are you gonna do?
yeah,
It was
Yeah.
just something that I thought I'd bring up that you had brought up back in the
yeah.
past. Now
Man,
you
that
had
was
mentioned AEHR, but that's writing like with Tesla, so I'm not. I don't know that I'm interested.
yeah. And
Yeah,
it's a low price stock, but it is bouncing up against a resistance level there. It's a question of will it break through it, in the end. And it seems like that's where it is today. It just continuously bounces against.
we've been
Uh,
talking about this forever, though, right? We
oh
don't.
Uh-huh.
yeah,
Yeah, this
Look
is.
at, I mean, it's, let me go back on this. Let's go back
Yeah, I don't know if
to
we want to.
boom. I mean,
That's a hard one to look at.
yeah.
yeah,
But
it's
if you get past that, was that your green line, your intermediate level?
resistance level.
Yeah.
Yeah,
I mean, you change the
that's a
momentum of the game.
1622. That's gonna be a tough one. You can see it, played around it right here and then
Yeah.
boom.
Well,
So
Well,
it
this
really
one.
comes
Yeah.
into that demand on the electric car, EV market, will we see a switch up? You look at Tesla and it's been trading sideways for a while as well. Are these two positions that, it's not tomorrow, it's not probably next quarter, it could be a year from now, but it's something to definitely keep an eye on.
Elon's not talking about making a lot of money with his new EV car. He's talking about a lot of money with the robotic industry.
Yeah,
His narrative is not he's going to be able to outsail BYD's latest low cost market with a 100%
Right.
tariff.
Well,
He's
I'll be
not.
honest. After
So-
driving across the country, if right now I think we're up to 3,000 miles. You don't see a lot of charging stations out west, you know,
Oh,
and that's where I go. The whole EV market is the challenge, but with what AEHR does, it could be applicable to other things, and what, for $12-13, it's definitely one to keep an eye on.
Yeah.
So, but no, I think Elon's move to robotics, along with, was it iFigure, Amazon, or Jeff Bezos dropped $100 million into that company. And he was the biggest contributor, and there's been quite a few others who have dropped 25-50 million into it. I think that whole robotic idea is interesting, and but it's sort of like electric vehicles. It'll get hyped, it'll get pushed higher, and then it go, okay, the hype's over. Now where is it applicable? I can see it in a warehouse. My brother-in-law is trying to reduce his headcount employee wise in his manufacturing company from, he's reduced it from 450 employees 5-6 years ago to 150. His goal is to get it down to 50 and everything be robotic. And because like he said, there's an upfront cost, but they don't complain, they don't ask for
they'll take
benefits,
vacation.
they
Yeah,
don't take vacations, they don't
no
get
breaks.
sick,
Yeah.
they don't have families, they just keep going. So I definitely see future in that. It's I don't know, we'll see.
I was last or a couple weeks ago, I was on that 500-mile car tour with the older cars, and we're driving through, and I saw one charging station. I should have taken a picture of it. Behind the charging station was a diesel generator that ran
Right.
the charging
That's funny.
station. And I'm like, how effect, here we are, it's supposed to be green, and they get their electricity from a diesel generator.
Well,
You
and
know?
that's the thing, is nobody takes that dot and says, okay, it's electric vehicles, it's charging, it's more efficient, blah blah blah, it's less damage to the atmosphere. But wait a second, where does energy come from? What is it comes from coal, it comes from natural gas, it
from
comes
oil, yeah.
from diesel generators.
Well, and then I was just thinking that diesel semi with the tank had to go bring that there and fill it up, and it's insanity to me. But I'm with you. You're going to drive across my state tomorrow, and you're not going to you won't see hardly any stations anywhere.
Yeah.
Yeah.
I mean, I'm sitting here looking at the window here of Main Street, Steamboat Springs, and all you see is F-150s and F-350s and diesel trucks, and you see a handful of the Rivias, but those are out-towners.
Wait till you get to my state.
Yeah, well, this isn't our first round trip, so but yeah, you're right. It's just, I guess I look at it and I go, where is the other applications that some of these companies that they hitch their wagon on to the EV market? Where else can they go with this stuff? And that's interesting. That's where I think is the opportunity over and above the car market.
Well, I think the technology of electric vehicles and everything is really cool, and at some point it'll come. I just don't think that you can push innovation and technology ahead of its natural schedule to evolve.
Right.
And when you say we're all going to be EV by this date and we're not going to have any more ICE vehicles, you just can't do that.
No.
The infrastructure of 100 years is together for ICE vehicles and not for EVs.
Well,
it's got to be an evolution. They didn't just switch from the horse to the car in one day.
I think this is becoming very evident in California, and we talked about, I think, this last week, where they're talking about they're not getting the sales tax on gasoline like they were because they made a big push towards the EV market. Now they're talking about charging 30 cents per mile on everybody, and it's like, you want to see a mass exodus out of California. That's one way to do it. But like you said, you can't the energy, the energy that is demanded from EV, the establishment of combustion engines and energy, oil and gas, that you just don't erase it in a matter of a couple of years. You just don't.
No. Well, yeah, I mean, right to the south of me is the Burlington Northern Railroad, and they got two tracks. One with trains coming east with full of coal, and one with trains going west with empty coal cars. They're all day,
Yeah.
all day. And you just can't turn that off and say, okay, we're going to put up a windmill and eliminate all that,
Right.
all that energy. It's just not going to happen.
I mean, I will say, coming through, was it West Texas and parts of New Mexico and Colorado, the windmill farms are insane. I saw that in South Dakota as well. But what happens when there's no wind? They don't move.
And then
So
they can't store that electricity either. It's got to be used, and
yeah,
it can only transmit so far. There's just a lot of things that need to be worked out.
yeah,
But you'll see if you went down Interstate 80 through Iowa, east of Omaha. Oh, sounds like a Bob Seger song.
yeah.
You'll see a lot of Mid-America Energy windmills there, and that's Berkshire Hathaway, and there's just
Yeah.
a ton of them over there.
We
But,
saw that
in
coming
Nebraska,
when he
you'll
came.
see you'll see two up here, probably 5 miles from me, that the electric company put up, and they never put any more up. They just were not efficient for them, I guess.
Yeah. Yeah. I think that's the thing. I found this new program that will chop up a video. It's an AI program. It'll chop up a video into 30 to 1 minute segments. And I got to thinking about the energy that is needing to do that. It'll take like 20 minutes to do take this video and chop it up into different, 26 different segments. And I was like, where are they getting the energy to do this? I mean, the compute power, I mean, the demand that it's going to take to continue to do this is immense. And I think that's where a lot of this starts to plateau.
Well,
there's
also efficiency, if you can better the efficiency of, say, a microchip,
Yeah.
or slow it, cool it down, things you could do to make it run with
Yeah.
less energy.
It's
That's
it's something we run into. The guys I mine crypto with, Bitcoin with. We came offline about a week ago because of the cooling element, and we're now we're looking into liquid cooling system, which will help the life of the miners last longer. But well, you get into summertime and where they're at, it's a beast. It's a
You mean it's not
beast.
cost effective to cool the?
Yeah. Since the halving, the production level has just dropped. So it's one of those things you start to weigh it out, and it's also like, okay, how do we keep these things cool?
Put them in a freezer. Put them in a refrigerator.
Well,
Get a refrigerator and stack them.
but that's energy,
refrigerators run pretty well. They run pretty efficient.
Yeah, I mean, that's a thought.
I know. I don't know how you get the cords in them.
Paul's an engineer. He's trying to help you out there a little bit.
Yeah, I mean, I never thought of that, but we're looking at like a liquid cooling systems where it's basically a tub, and it's a certain type of liquid. You take the fans off them and you drop it in, and it'll function, under this liquid, and it extends the life of the miner by almost a year, but also the energy cost. But you got to build the infrastructure for it, and that's where the upfront cost
Think
is.
about it. I mean, that's what our cars do with radiators.
Yeah.
They use coolant to cool the engine.
Yeah, true.
Unless you got an old Volkswagen or a Porsche.
Yeah, a little
That's
bit.
true.
Little 911. Yeah.
Yeah.
I know. It's just evolution, right? Yeah.
I don't have anything else unless you guys want to look at something or anything. But next week I am going down south to see Bachman Turner Overdrive Thursday and Friday.
Cool.
I'm going to take care of some business every day.
In every way.
In every way, and we're going to let it ride. And so I've been doing that a lot, trying to go see some of these older bands while they still have a few members left,
Yeah.
Yeah.
Yeah. Cool. So we will not be having the call next week.
Right.
Okay.
I do
Unless you
like the
want to,
stocks you've been put up, like Eli Lilly. To me,
Yeah.
that is a nice. I know they're harder. They're not necessarily great for swing trades, but I like the, I'll say the 52-week hires where they're trending up.
yeah,
You
I
know,
think,
yeah,
I think
yeah.
Lily would have been a great swing trade. And, I put it on the list and it's still there and it's above where the day I put it on. So, that's a good runner. Those are the kinds I really like, Paul, that will run for weeks and you just don't have to worry about it.
Yeah.
Yeah, those are good. I mean,
They're hard to find in these markets, like what we're trying to go through and, decipher every CPI report and what's this and what's that. And, you can hit your stops pretty quick in these markets.
Yeah.
but all you need
Yeah.
is a few good ones.
That's true. Well, the
You
key
know,
is,
yeah.
like we've been telling you, the key is to not let your losers run. Get out of those quick, which is the biggest thing. It's the hardest thing to do is to sell at even a little
Yeah.
loss. But once you start looking, okay, so I sold it at 1% loss on this one, but this one over here I gained 3%. Okay, so you're good.
Yeah, and you're not afraid to add to your winners. Like if your
Right.
winners really got a lot of momentum,
Yep. And
like
momentum's
these,
big. You play momentum
yeah,
a lot, Paul. So that's the
yeah,
value of the momentum.
yeah, and I also have to be nimble to get out. So
Yeah.
yeah, these are going good now, but like I'm watching them, so never fall in love with a stock.
There you
Um,
go. That's true.
never
Yep.
fall in love with a stock, and
Yep.
I think
And
that yeah,
don't regret getting out with a profit and then it goes up the next day and you're like, oh, I could have got that, because you still got a profit. I would rather do that than get out with a loss and go, crap, I should have got out the day before, which I've done before too.
this will be the fourth time I'm in Nvidia.
Well, nothing wrong with that.
So no, there's nothing wrong. It's just
So
I guess what I'm trying to say, should have stayed in. What was that, Scott?
it's all good,
It's all
right?
good. It's
Yeah.
all good.
I've
I
been
appreciate
a
your
few
yes.
times.
Scott, have you been trading any at all?
Yeah, I've been in and out of several stocks, Google and Amazon and AMD. That's a loser for me.
Yeah.
Why I keep playing it, but I keep reading somebody's hype on it on Seeking Alpha, and it resells me on it, and I keep losing on it. But yeah, I've been trained, and I had a really good week. Last week, I just thought things were going to go good with this Elon stuff and Apple stuff that was coming up, and I bought in to those and a few other stocks, and I coined because I knew they were related to that. Some of the stuff was related to that, and I had about 6 stocks that I bought into that I played, and boy, I don't know what day it was, but I was communicating with Paul, and it was about the best day I've had since I started.
Margaret's
Yeah.
birthday. Margaret's birthday. You
Yeah.
Nvidia, Apple, Microsoft. I think you mentioned Google. You mentioned someone else mentioned Palantir. I know what you mean about AMD. I'm out. I'm not playing AMD anymore. It's
But it was
yeah.
a great day. It was over 10 grand for the little bit I play in my game. So
Wow.
added nicely
That's
to my world.
nothing to sneeze at there. That's awesome. Yeah, I'm glad you guys are working this out and making some money. That's what it's all about.
How are
So
you doing, Mark? How are you doing? How'd you
me,
do this week? Yeah.
this week I didn't play that much. I picked up a little Bitcoin this week. I don't like to trade on these weeks when you got FOMC and all these reports.
Right, right.
And for me, I was telling Trent, I'm kind of busy this time of year with the farm, and then I promote and a big concert, a regional concert that comes up over the 4th of July. And so I've been just busy working on that. So if I can't devote time to kind of watch it, I try not to, I don't get into it because I want to do everything right.
Right.
So
Yeah.
Bitcoin was like, I was looking at that. I'm like, okay, getting a little of that just because I'm not selling it, I'm just acquiring it. So,
Accumulating, yeah.
yeah, so that's all I pretty much did. A little bit I only put a few things on the watch list. I think it was IBM and CVS and didn't do too much, but I'll keep throwing out charts. You guys can look at them. They're
Yeah.
not necessarily the ones that I would buy all the time, but they have potential, and just check it out to your trading plan and what you want to do. And I'll keep throwing them up there, and don't think you have to buy each and every one, because I certainly don't.
Well, no, I right away I look to see what sector it's in. Right
Yeah.
away, I go right to it because I'll say, yeah, that's I like CVS. I was like, CVS, that's a tough sector. That could be a nice swing. It could be a nice swing, but it's not for me.
Yeah.
That's all.
Well,
But
I kind of put them on there if they kind of check a lot of boxes on my trading guidelines. If they do, I'll put them up there. And you guys have your
Granger.
own. Yeah.
Oh, I
How's
thought
that?
Granger would have been good. Jeez, it's not. It's down to. Oh, let's see. I'm looking at a weekly here.
That's kind of a high cost stock. Yeah. Well, it went
Oh,
back
it
down
just-
to the went back
it
down to
went
the
back
nines.
down.
Still
It
bouncing on
bounced
the
off
nines.
resistance. Right off
Yeah.
resistance. Yeah.
Well, it's off
Right.
support. Yeah, at the 9. And then you still have a positive MACD on it. So let me put it up real quick while we're talking
Yeah,
about it.
Granger's like supplies parts.
Yeah.
Mechanical parts, pumps.
You see their
so on.
commercials. Yeah. So I saw it, it popped above the 9. Now you're just kind of playing between the support and the resistance at the 20. So, I mean, technically you got the MACD going good. You got stochastic, you're still a little under on the RSI, so a little momentum. But if it can hold here and you've still got some room to run, just keep it tight on the bottom. This is a kind of a pricey stock. It's $900. So,
well, compared to its fundamentals, I don't know. Is it? I mean,
well, I just mean a lot of
Yeah,
people will say, that's above my swing trade budget of $5,000 or whatever people have.
fractionals too. But that's a good company. That's a good
Yeah.
company.
So some
It's just-
people like to buy more shares, so they'll go to a smaller, like a $5 or $10 stock, so they can buy more. So this isn't for everybody. Yeah, it's like Berkshire. Oops. Which, it's just kind of floundering now down below the 50. But again, we're consolidated between, the Bollingers, and we'll see what happens. But again, we had a crossover the MACD, crossover the stochastic, RSI. So, I'll just wait for it to come back. And, I don't mind playing this one just because I'll keep the shares if I want, but for the most part, this has been a pretty good one for me. So
Very good.
Anyway, so everyone have a good weekend. I really appreciate you guys being part of the Platinum channel. I really appreciate everything you guys do on the Discord, and talk and help each other out, ask questions, and supply some charts. And hopefully the charts I put down every morning, you guys take a look at them and you can nay them or yay them, and whatever you want to do. And
Oh, they're great.
I'll keep
Yeah, I
looking
look
for
at
them and put them on, and we'll still do some commentary, and Trent and I will still do the 2Regular Guys show. And
Happy Father's Day.
yeah,
Yes.
for all
Thank
you
you.
fathers out there.
To all of
Yeah,
you
we're
Thank you. Thank you.
or know it.
And
Yes.
again, no Platinum channel next week, but the week after, and then the following week is the 4th of July, and I'll be doing that concert for 3 days. So that'll be the day. Well, I think 4th of July is on Thursday. Yeah. So I don't know. The market will be closed Thursday, and it'll probably be open half a day on Friday, I'd imagine. So we'll see.
Okay.
All right.
Cool.
All right, gentlemen.
Thank
See
you
you
All right.
all.
We'll see you at the 3 o'clock meeting if you're there.
You
All
bet.
right. All
All
right.
right, guys.
Take care.
You
Bye-bye.
too.
Have a good weekend.
Talk to you
All
later,
right.
guys.